There's a market crash just around the corner. Marc Faber says another financial crisis could hit global markets in the second half of the year, and it could be even worse than the one we experienced 6 years ago. Mark, nice to see you. Well, it is called the boom, doom and gloom report.
Yes, absolutely.
Right. What's your point? The valuations are too rich? Where?
Well, first of all, you know, the markets are very big nowadays, so you can have some stocks moving up and others moving down. And what we are seeing is a high valuation in the US, particularly in social media stocks, biotechnology. And as you may have observed, a lot of these companies are already down between 30 and 50%. Yelp, Twitter, Facebook down only 20%, but nevertheless, LinkedIn and Netflix and so forth and so on, and the cloud computing companies are also in some cases down 50%. So we had already a big break in the market, but we haven't had yet a big break in the overall market.
Some people say we've had a rotation out of the momentum stocks into more traditional.
Yes, utilities, energy. And what we've seen over the last 3-4 months is an accumulation of mining companies.
Who have underperformed notably.
Yes, of course but this is now the big issue. Since 2011, some markets already since 2010, some since 2012, especially emerging markets, have grossly underperformed the US. So you have the US up here and other markets down here. And you as an investor, you have to now choose what to buy. I believe it's too late to buy the US stock market. That's, by the way, also the view of Jeremy Grantham, who thinks that over the next 7 years the returns from US stocks will be negative.
So what do you do then if you believe that?
Well, I believe that it should be clear to anyone, when prices are low, such as in 1982 for stocks, and interest rates are very high on treasuries, 15%, then the expected returns are also very high. Whereas when interest rates are at 0 and the 10 years treasury is at 2.68 or 2.7%, the bonds are at 1.5%, even Italian bonds are at 3%. What is your expected return over the next 10 years? Now, I'm not ruling out that there can be a further bond market rally as we had in the last 3 months since November. Long-dated treasury bonds in the US are up 10%. The stock market is flat to down. So it's possible. But in general, I think individual investors have excessively optimistic expectations about their future returns.